Bloomberg Audio Studios. Podcasts, radio, news.
This is the Closing Bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlet Fu.
Well, let me take you through some of the gainers that I was watching over the course of the day. Netflix is one of them, NFLX, of course, and Greg Peters, the co-CEO of that company, speaking at a Wall Street Journal event in London, expressing some optimism here about that company's ability to kind of weather the uncertainty that we're seeing all around the world because of trade talks. Of course, the president threatened to impose new tariffs on the filmmaking and movie-making industry as well. He's saying Netflix continues to be optimistic. It's going to make those movies overseas. It's going to stay the course, makes a lot of them in the United Kingdom where he was speaking, plans to invest more than $1 billion over the next 4 years on shows and movies that are shot in Spain, continuing its focus on games. Goldman Sachs, another one I've been watching over the course of the day. Bank of America maintaining a buy on Goldman Sachs with a price target of $700. Again, the theme here is resilience in an uncertain environment and attributing a particular promise to its asset and wealth management business. The last gainer I'm flagging here is McKesson, it raising its earning forecast because of broad-based operational momentum. Morgan Stanley maintaining an overweight on McKesson, raising its price target from $745 to $770. Again, saying it's well-positioned to manage risks.
Can I just add a couple of honorable mentions? Oklo having a great day, their best day going back, basically since they, back to their highest levels, I should say, since they went public. And that's on the back of an announcement that they are going to be the intended awardee of a new U.S. Department of Defense contract. And also Voyager. They went public today, guys.
A really big name. I mean, we were seeing a lot of the shares surging today for a really good IPO. But let's look at some of the names that are in the red. Today, I had eyes on Lockheed Martin. This is, of course, the U.S. defense contractor. We saw shares down 4.2%. That's the biggest drop since April. And this is after Bloomberg reported that the Air Force had cut its request in half, its request to Congress for F-35 jets. Of course, this is really weighing on defense contractors, not only Lockheed, but we were seeing some of its peers down as well. But I'm also looking at Chewy. Now, we saw shares of this company falling for their worst daily performance since August 2023. That's down 11%. This is an online pet food, pet retailer. A lot of different foods that you can get there for your pets. But this is after the company's...
treats too, Nora. Don't forget the treats.
Is this so? See, I don't have a pet. I'm sorry. Yeah. My pets are back in Virginia with the parents. But we did see gross margin and free cash flow falling short of expectations here. But it did reiterate its annual sales target. And lastly, another... Are you a dog or a cat person? I'm a little bit of both. I'm not going to lie. You know, I split the line here.
Yeah, I'm a dog person. I think Scarlett's a dog person, and you are.
Simon, welcome company.
And that was Alix Steel letting you know what side she's on.
I love it. I love it. Well, also Vera Bradley. This is a name that a lot of people know in the retail space. We're seeing shares of that company falling for their worst day since the pandemic 2020, down for double-digit losses, down 19%. The company suspended its guidance, but also announced the departure of its CEO. So that pulled guidance is really reflecting executive and board leadership changes and significant uncertainty concerning the consumer environment there.
And no surprise here, Oklo's going to offer some stock. Makes sense. Great day.
Why not?
Best since its IPO. Why not? Those bankers making some money on that. Okay, let's go to the bond market here. So buying all across the curve, less in the back end, more in the front end. The 2-year yield down by about 7 basis points below that 4% level. You wind up having that benign CPI. Stocks couldn't catch a sustained bid, but bonds could as yields moved lower. The dollar, though, couldn't either. So that was a quite interesting dynamic.
Yeah, kind of interesting, too. We should point out as well, of course, you know, obviously the economic data that we're going to keep an eye on for the rest of the week with PPI tomorrow. And, of course, this consumer sentiment data coming out at the end of the week out of UMich. But don't forget, we get some earnings, too, out of Oracle as well. So maybe another read after the bell today here on the AI trade.
And don't forget, you also have the 30-year bond auction tomorrow as well, which is going to be a big one.
Yeah. Well, did you see the 10-year bond auction today? I was kind of interested. I mean, that did come in a little bit less than what you saw coming into that as well here. I think Oracle, guys, is now crossing the wire. Let's get right to it here. Oracle shares, at least the knee-jerk reaction. You see that right now to the upside with fourth quarter adjusted EPS at $1.70 a share. That is a beat. The street was looking for $1.64. Revenue also looks like it came in above street estimates, $15.9 billion. The street was looking for $15.6. Cloud infrastructure in the most recent period coming in just a touch light, $3 billion. The street was looking for $3.07 billion. And we should just point out margin in the most recent quarter that came in pretty much on the nose, guys, at 44%. 0.3%.
All right, let's also get you a read on the consumer here. We're taking a look at Oxford Industries, and I'm going to pull up the earnings right now. OXFD. The results are as follows. Actually, you know what? No. OXM. Sorry, guys. OXM Equity.
This is real time. We're good.
We're good. Okay, Oxford Industries first quarter adjusted EPS $1.82, beating the consensus estimate by 1 penny. In terms of the outlook here, second quarter net sales will be anywhere from 395 to 415 million. Analysts were looking for, on average, 411 million. And Oxford says it sees second quarter adjusted EPS of as much as $1.25, whereas analysts were looking for $2.21. I'm not sure if we're comparing like with like here, but if we are, that is a big miss on that outlook for the second quarter adjusted EPS. And you can see the stock right now down 8.5% in after hours trading. And of course, Oxford includes brands like Lilly Pulitzer and Tommy Bahama.
All right, going back to Oracle for a second, guys, because the stock is lower, but I mean, the numbers are pretty good. And the CEO is saying, Larry Ellison, that look, 2025 was actually a very good year, but they think 2026 will be even better. Their cloud infrastructure growth rate is expected to increase from 50% for its full year 2025 to over 70% in the full year 26.
Stood out to me as well. I was just going to pile on there and say that their optimism there about the growth of cloud computing certainly coming through here in these earnings that we got this afternoon.
Definitely. I mean, we're seeing a lot of these tech names really just roaring. I mean, I think we see Oracle, as we're digesting a lot of these results, focus is really on tech here.
The focus is on tech here. And let's walk through some of the individual segments there, because that gives you, I think, why maybe a little bit more of a sense of why we're seeing them down. When we talk about that cloud services business, it was still a growth rate of about 14%. But some of the whisper numbers coming in was looking for something closer to 20%. Cloud license revenue, that was up about 9.2%. Hardware revenue, I'm not sure how much of important that is. That was up about 1%, but the services revenue was down, and that was down about 1.8%. That also came in below street estimates as well.
And there's a comment here from Stafford Katz, the CEO, saying that fiscal year 2025 was a very good year, but we believe 2026 will be even better as our revenue growth rates will be dramatically higher. Again, dramatically higher. They're looking at total cloud growth rate applications plus infrastructure increasing from 24% in fiscal year 25 to over 40% the next year.
All right. Of course, we're going to have to wait for the earnings conference call to get a better read on the guidance going forward, as that, of course, is not included fully into the release.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.